The ICT Silver Bullet has taken 2023 by storm as one of the most all-around precise and consistent strategies for new and experienced traders. But if you, like me in the beginning, struggled learning ICT concepts and wanted a more simplistic approach, you guys have clicked on the right video. In this video, we're going to go over everything that you need to know about the ICT Silver Bullet with tons of examples and backtesting. But before we get into the video, make sure you guys are following me on Instagram. This is where you can find me. Coming into the video, the first thing we want to go over here is understanding what is a fair value gap. A fair value gap is the separation between this candle's high and this candle's low in a 3-candlestick formation. As you can see, this candle pushed higher, created this high right here. This next candle pushed higher here with only the body pushing above this high. And the next candle came lower, creating this separation between this low and this high. As you can see, this middle area between this low and this high with the body, this is your fair value gap or your buy side imbalance, sell side inefficiency. Same thing here with the bearish formation. It's a 3-candle pattern. You have this low right here. Then you get this strong close on this bearish body through this middle area, and then you have this high. This separation between this low and this high, this middle area, that is your fair value gap. And typically when trading fair value gaps, what you anticipate is price to come back down into this separation area. As you can see, from this low to this high, price come back down into the at least the opening here or the 50%, and then you guys see a bounce. So that's what we anticipate from a fair value gap, and the opposite can be said with a bearish fair value gap. As you can see, the separation here from this low and this high, we're anticipating price to come back into at least the open here. Right here, this is the opening. This would be the opening for a bullish fair value gap. This would be the opening for a bearish fair value gap. So we anticipate price to come back up here, at least the opening or 50% level, and then we see that rejection to go lower. That is typically how we would trade a fair value gap. This is very, very, very important to know when trading the silver bullet. Next, let's get into the engineering behind the silver bullet. So the first question we want to look at is what time to trade it. The silver bullet should only be taken between the times of 10 a.m. to 11 a.m. Eastern Standard Time. If you guys are living somewhere else, whether from another country or maybe another state, make sure to have it on New York time or EST. It has to be between 10 a.m. to 11 a.m. Nothing more, nothing less. It has to be within that time window. Next, we want to look at what time frame. The silver bullet can range from the 15-second chart, the 30-second chart, the 1-minute chart, the 3-minute chart, and the 5-minute chart. As a beginner, I recommend that you guys start on the highest time frame. And as you progress in your trading, you can go up to the 3-minute time frame and then eventually the 1-minute time frame. You do not have to go to the 30-second or the 15-second chart. This is maybe months, if not a year later. As you gain more experience trading the silver bullet and you gain more confidence is when you can potentially go to the 30-second and the 15-second chart for extra precision. But the 1-minute chart is perfect. This is the most recommended time frame for traders trading the silver bullet is the 1-minute chart. But as a beginner, I stress it that you guys start on the 5-minute chart and the lowest potentially the 3-minute chart, as that is because those are higher probability and a lot easier to spot than a 1-minute chart. The 1-minute chart has a lot of price fluctuations. As a new trader, that can be a little scary to you guys. So build that patience, wait for the fair value gap, wait for that setup to form on the higher time frames and trade it and build that confidence. And as you guys build that confidence, that's when you guys can go to the 3-minute chart and then you guys can go to the 1-minute chart. But never just go straight to the 1-minute chart. It's like going to a gym. You're just now getting to a gym. Why are you going to pick up a 50-pound weight? No, you start off with the light stuff. You start off with the 5 pound, then you get up to the 10 pound, then you get up to the 20 pound. You know, these are like 50 pound weights and 100 pound weights. You don't want to just jump straight into the 50 and 100 pound weights, as you can easily mess up. So I urge you guys that you guys start off from the 5 minute, then the 3 minute, then eventually the 1 minute. And as you guys become experts at the silver bullet and find super consistency through the silver bullet, that's when you guys can potentially look into the 30-second and 15-second charts. But most recommended for beginners, start off on the 5 minute and then work your way down. Now what you guys may be asking is, what markets does this strategy work with? This strategy works with all markets, from indexes to forex to even commodities like gold, silver, and even the bond markets. This is algorithmic. This works on all markets, don't worry. Next question you guys may be having is, I'm in London or Asia, how will I trade the silver bullet when I can't make it for New York? The London session silver bullet will be between 3 a.m. to 4 a.m. EST, and the London close silver bullet will be between 2 p.m. to 3 p.m. Eastern Standard Time. These are the other two silver bullets that if you cannot make it for New York, or you're just unable to trade New York, you have these other time frames to trade as well. First example here, we're on the GBPUSD Forex pair on the 5 minute time frame, trading the New York silver bullet from 10 a.m. EST to 11 a.m. EST. Something to take note of when trading the silver bullet is the fair value gap does not have to form during that time frame from 10 to 11. It can be before then. As you can see here, even though we're taking the trade only between the time frame of 10 o'clock to 11 o'clock, the fair value gap can form before then. So we have a fair value gap right here that was formed during 9:40. Coming into a market here at 10 a.m., we're anticipating price to come down into this fair value gap, find support to then push higher. But before taking a silver bullet, it's important to have a narrative. Essentially, where has price been and where is price going? It's important to note that the market can only go three ways: either higher, either lower, or consolidate. This is very important to note when trading the silver bullet, because you have to understand what kind of market trend are you in. As you can see here on the GBP pair, we have been going higher. Higher high, higher low, higher high, higher low. And now we're anticipating that pullback into this level to then continue going higher. When prices are going higher, support is to be respected. When prices is going lower, resistance is to be respected. So since prices is going higher, this support level here, this bullish fair value gap, is to be respected. We're going to come into a market here. It's 10 o'clock. Now it's time to trade. Wait for price to come down into this fair value gap, and then you take the trade. Price come down to the open of the fair value gap, so we can take a trade like this at the open. It's important that when you guys are trading fair value gaps, that you guys put your stop loss below this low. Remember what I told you guys. The fair value gap is a 3 candlestick formation. This, and this. For a bullish fair value gap, your stop loss will go below this low right here. And for a bearish fair value gap, your stop loss would go at this high right here if this was a bearish fair value gap. But since this is a bullish fair value gap, your stop loss goes down here. So we're inside the trade. As a beginner, guys, it's important that for the first month of trading the silver bullet, your aim is to just get a 1-to-1. So just a 1-to-1. And the reason why I say that and ICT says that is the goal in the beginning is for you guys to just gain the experience and find consistency. After you guys are profitable for 1 month trading the silver bullet with a 1-to-1, that's when you guys can go into 2-to-1 R. And this is typically where you'd see traders trade the silver bullet, either getting a 1-to-1 or a 2-to-1. Or more experienced traders would sometimes go for a 3-to-1 when they're trading more volatile markets like gold and NASDAQ. But as a new trader, your aim in the beginning is just a 1-to-1. Simply just put in the time and get those reps. That's all it's for. Don't try to rush this. Don't try to get too much out of it. Your goal in the beginning is just to see the market, see the silver bullet, learn from your mistakes, get better, and find consistency. And then after 1 month of trading just a 1-to-1, that's when you guys can go to a 2-to-1. And after 2 months of trading the 2-to-1, that's when you guys are consistently profitable trading the silver bullet. And that's when you guys can either go to live money or a funded route and use the approach. This is how ICT laid it down to how to quit your job in 90 days. Start off trading a 1-to-1, build that consistency, learn from your mistakes, build that psychology. After 1 month of profitability, go into a 2-to-1 R, and then after 2 months of profitability trading a 2-to-1 R, that's when you guys can go to live funds or a funded route. So boom, I get into trade. This is that silver bullet fair value gap. Okay. And this is why I tell you guys to put your stop loss right here. If the fair value gap is to be respected, it should not break below this low. Remember that. This low is your strong suit right here. Price should not break this low. If it breaks this low, then you were wrong. And if you were wrong and you do take a loss trading the silver bullet, what you do is you either look for another silver bullet or you walk away. And that's it. And then we get our 1-to-1. After we get our 1-to-1, we close our computers, we shut it off, and we come back the next day. We don't try to aim for more. We don't try to get more out of it. All we're doing is just putting in the reps, building that consistency. That's the goal. Now we're going to be looking at the gold spot against the US dollar, or XAU against the USD, on the 3-minute time frame for the London session silver bullet. First, we're going to mark out the structure. We're making lower lows, but then we pushed higher. And now we're making higher highs. As you can see, we're pushing lower. We created a low here, and now we're pushing higher, creating higher prices. So this is a change of character. Essentially, a change of character is when the market goes from pushing lower prices to eventually forming a low here, whether it tapped into a level of support or some bullish demand level down here, to then seeing the market push higher here and creating a reversal. This is what you would typically call your London reversal, where we would create a low prior to London, and then coming into London, we would reverse. As you can see, create this low, now we're pushing higher. So coming into market, we're anticipating price to come down into this level to then push higher. The market seeks two things: inefficiencies and liquidity. When trading the silver bullet, we want to focus on the liquidity, especially as a beginner, and what's easier to spot than a previous high or a previous low. So now we understand the structure. We're going from lower prices to higher prices. Now we have a target here, which is this high. The silver bullet is between 3 a.m. to 4 a.m. London session Eastern Standard Time. Okay, push lower. We're being patient. We're waiting for a bullish fair value gap to form. And just like that, we get that bullish fair value gap right here. We get that bullish fair value gap right here. If you guys weren't unable to get into the trade as price came down into this fair value gap, either you became fearful or I don't know what would have, but let's just say you didn't get into this trade, it's perfectly okay, you know, taking a trade, you know, up here, as long as your stop loss remains below here. This may be a lot harder. It is important that you do take the trade inside of the fair value gap as it comes down into it, whether that means putting a limit order there and waiting for a limit order to get hit, or taking the market execute as soon as it gets in there. But let's just say you missed it, okay, as long as your stop loss is down here. Same for 1.25. So quick 1-to-1 trade. Our 1-to-1 trade has been hit. Now it's time to close off the computer and walk away. Coming into the market here on the NASDAQ on the 1-minute chart during the PM session or the London close silver bullet from 2 p.m. to 3 p.m. Eastern Standard Time. I want to take note of the structure first. So we've seen this high being created, and then we failed to get up this high. Overall breaking structure where price breaks through this level, where price action goes from bullish price action, as you can see, bullish, to now breaking structure, and now we're looking for bearish price action. So we see this low being created. Now coming into the 2 o'clock to 3 o'clock hour, we're looking for a pullback to then see a continuation lower, and some levels of targeting here are these equal lows. Whenever you see equal lows, essentially when we have this low and we have this low, they're relatively the same, don't they? Maybe by a tick. Whenever we have equal lows like that, we always want to take note of those, as those are most likely areas that the market would want to reach up into. So we have our overall structure, which we're going from higher prices to now going lower prices. So now we're looking for shorts, and we have a level of targeting these lows right here, which the market would want to seek into. So let's see how this plays out. We push lower here, creating this fair value gap right here. Price comes back into this fair value gap. So as price comes back into this fair value gap, we can take a short right here. Stop loss above this high right here. The 3 candlestick formation, stop loss above this high. And let's go for a 1-to-2 this time. You've been trading silver bullet for quite some time now. You're finding consistency, and you want to up your targeting a bit. So let's go for a 1-to-2 right here. Okay. And just like that, we're done. Just like that, our target is met. That took about 1 to 3 minutes. That's how quick it can be sometimes. Sometimes it may be 10 minutes, 15 minutes, sometimes 30 minutes. In this case, it was just 3 minutes. Now, what we do next is we log off our computer, we shut off TradingView, and we come back tomorrow to do the same thing tomorrow. That's going to be it for the video, guys. Thank you guys for watching. I hope I covered everything that I needed to in this video. I not only covered the 5-minute, the 3-minute, and the 1-minute fair value gap. I did not go over the seconds fair value gap. Make sure you guys hit that like if you guys want to see that video. But we also covered a variety of markets, from the forex markets to the commodities markets to the index markets, to show you that this is simply works on all markets. As well as we shown you the London session silver bullet, as well as the New York silver bullet, as well as the London close silver bullet, to show that this works throughout 3 sessions as well. Understand that not every single day you're going to have a silver bullet, not every single day you're going to win. So don't expect this to be your golden strategy or your golden missing piece to the puzzle. The missing piece to the puzzle is you Showing up every single day, doing the same thing day in, day out, that is what's going to keep you on the path to consistency. This strategy is one of the most simplistic and precise strategies for new traders and experienced traders. I hope I was able to cover it in a way that you guys understood completely. Make sure you guys hit that like, subscribe, and comment what you guys want to see next from me. I'm Arkham. Peace out.